Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Woohoo! TGIF Friday, and it's going to be a long weekend here in the U.S. We have an upcoming Labor Day weekend. So, again, I hope you guys have a good, safe upcoming weekend here, and let's kind of get started here. Sorry, I'm a little congested here today. Of course, it seems like I'm always congested, but let's kind of move on to the economic news. Today's the big day we've been waiting for. We got jobs, non-farm payrolls, and the previous month we had 85,000 new jobs. We're expecting a little bit of a drop off, 53,000, but we got what? A donut. Not even that. Zero. We got nothing. Very disappointing. Of course, we'll check out the unemployment rate. It's at 9.1. Basically, this is all remained the same, so nothing there. But very disappointing with the jobs numbers. And then we got people who are working, and they had zero point 0.4 hour average hourly earnings raised the previous month. They figured it'd drop a little bit. It actually went negative. So again, unfortunately, not good numbers today. So these were not well, terrible numbers. So let's just be frank. These were terrible numbers. So let's go ahead and take a look at the headline news. As you saw with those, we got the stock markets down. It actually was down as much as negative 200. The Dow was over 200 at one point, and it's been dipping around 180 and 200 as I've been kind of putting this together for you this morning. Another item that's the big news right now is the federal housing is looking at maybe suing the big banks over mortgage-backed securities, providing basic toxic loans. On basically, there's about a dozen people, but BofA was mentioned, Goldman Sachs was mentioned, Chase and Deutsche. So there's going to be obviously others, but those are ones that were kind of named out of basically providing toxic loans, and a lot of it had to do with the stated income or non-document type of loans and treating it like normal loans. So, especially when people were thinking that they were either overstating their income or providing obviously false information. So they're being sued. So this isn't good news, people. Even though you may not care for some of these banks, but the reason why it's not good news is that you know what, these guys really aren't the ones that can get punished here. They may have these big, huge fines, but what it's going to come down to is going to be passed on to the consumer. They know how to pass these fines up to the consumer, and this could be through higher mortgage rates or fees and such right down the line. That this isn't going to dent these guys. These guys will pass these on down to the consumer. So anyone get hurt, it's going to be you guys. So let's not keep well, what do they say? Misery keeps company or something like that. So, anyways, let's kind of move on. And also, the investors are concerned about renewed default fears in Greece. Apparently, the government and the investors couldn't come to a head on some conclusion in regards to negotiations, so they kind of broke apart. And now there's renewed default fears going on here. So let's go ahead and take a look at what's going on in the bond market and what's driving interest rates. So as we know, we're kind of the bond market's more like a undertaker, and when you get all these negative news, for the most part, bonds do well. So we had a nice little rally yesterday, Thursday. I actually closed above the 10-day moving average. And then we had this big opening gap here at about 21 basis points upwards. So we're about 104.31 currently, and we're just down slightly, but we do need to get this gap closed at some point. So hopefully we'll close it and then come back upwards and then close above here. We can see a nice little rally in the bond market here and see much better interest rates. But overall, interest rates are better today, especially, this is probably the best we've seen in nearly half a month, in a couple weeks. So these are probably better rates we've seen in a couple weeks here. As you can kind of see, the last time we were in this level here, we're back around August 18th time frame. So a couple weeks. All right, folks, you guys have a wonderful and safe holiday weekend, and we'll catch you guys on Tuesday when the market opens back up. And again, if you guys are out looking around to buy a home, or if you guys looking to refinance, stop by my website over at CaliforniaMortgageTips.com. There's some mortgage calculators on there, some great free reports, great lot of education, and lots of great information that you may find useful for yourself, whether it be for credit repair, to loan programs, to just advice on how to search for homes, or as such as even divorce stuff. I have some stuff for divorce strategies and such on there as well. So go ahead and stop by, take a look at it. Again, catch you guys on Tuesday. Bye.